This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil extended losses on Thursday for a fourth consecutive session as renewed COVID curbs in China raised concern about fuel demand in the world's biggest crude importer. China is battling a rebound in infections in several economically vital cities, including the capital Beijing. In the manufacturing hub of Guangzhou, millions of residents were told to get tested for COVID-19 on Wednesday. Chinese COVID-related demand woes, the reinvigorated dollar and a loose fourth-quarter oil balance could push prices further south, said Thomas Varga of oil broker PVM. The downside could be limited with the European Union ban on Russian oil and G7 price cap looming, he added.
Soaring costs and supply chain bottlenecks have put a question mark over plans for what would be the world's most northern oilfield in production, with Norway's Equinor and its partners postponing a decision on the Arctic project. Environmental campaigners celebrated on Thursday as state-controlled Equinor pushed back an investment decision on the Wisting offshore oilfield to the end of 2026 from December this year, with one analyst saying it could be shelved indefinitely. The delay is a blow to the Norwegian government's hopes for more oil and gas jobs in its north, but a relief for activists who have warned of the risks to vulnerable Arctic nature.
Moving on to the top news in the energy sector.
The European Commission will propose a gas correction mechanism to the 27 EU states on Friday, a corridor designed to curb price spikes but not a firm cap sought by many member countries, sources said. The European Union has been in a tug-of-war over a gas price cap, with a dozen or so member countries calling for various versions of such a market intervention to cut prices amid an acute energy crunch that is driving record-high inflation. But Germany, the bloc's biggest economy, the Netherlands and the EU Executive Commission say a cap would risk putting off suppliers and reduce incentives to bring down gas consumption.
The European Union will struggle to fill its gas storage tanks next summer, the head of its executive warned on Wednesday as she announced measures to boost renewable energy supply but stopped short of backing a price cap that has split opinion across the region. Addressing the European Parliament, European Commission President Ursula von der Leyen announced plans to accelerate the granting of permits for renewable power projects. She said that the EU will have added 50 gigawatts of renewable power this year and could do more in 2023. She said the bloc had already increased LNG imports and cut gas consumption to deal with the energy crisis related to the loss of supplies from Russia since its invasion of Ukraine in February.
Next, we have the top news in metal markets.
Gold prices rallied over 2% on Thursday to a more than 2-month high as data showed U.S. inflation cooled off a bit in October, lifting hopes that the Federal Reserve would adopt a less aggressive approach to rate hikes. The U.S. Consumer Price Index, CPI, rose 0.4% last month after climbing by the same margin in September, the Labor Department said. Economists polled by Reuters had forecast an advance of 0.6%. Spot gold climbed 2.5% to $1,749.23 per ounce by 11:34 a.m. Eastern Daylight Saving Time, 16:34 Greenwich Mean Time. U.S. gold futures jumped 2.3% to $1,753.40.
Prices of copper and other industrial metals rose sharply on Thursday after U.S. data showed that underlying inflation appeared to have peaked, which may allow the Federal Reserve to stop raising interest rates sooner. A lower peak in U.S. interest rates would help metals because higher rates restrain economic activity and boost the dollar, making dollar-priced commodities more expensive for buyers with other currencies. The dollar plunged after the figures showed U.S. consumer prices increased 7.7% year-on-year in October. We will now look at the top news in the agricultural. Malaysia's palm oil stocks at the end of October expanded for a fifth month to a 3-year high as production improved, data from the nation's palm oil board showed on Friday. Inventories in the world's second-largest producer rose 3.74% from the previous month to 2.4 million tons, the highest since September 2019, according to the Malaysian Palm Oil Board, MPOB. However, the figure was slightly lower than a Reuters survey pegging inventories at 2.53 million tons. Crude palm oil production rose for a fifth month amid the peak crop season, climbing 2.44% from September to 1.81 million tons.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.